Hey guys, it's Jim. And I just read a kind of disturbing statistic that credit card debt is at all-time highs and growing very rapidly. And that going into a recession, probably not a good thing. The counterbalance to that is we all have a lot of equity in our homes right now. And so I wanted to talk through an example of using some of that equity to bring some relief, basically, just bring some real relief. So hang with me for a minute. I think it's an eye-opening thing. It's just fascinating to me to go through this exercise. So I want to go through it with you. So let's go through it. Let's say someone has a lot of credit card debt and some other debt, and it's really just weighing, make the payments, it's fine, but man, it'd be nice to get some relief, wouldn't it? And we have a lot of equity, but we also have a 3% interest rate. So I put the homes in Charleston County, property was purchased for $500,000 back in March of 2020, right? Actually, the perfect time to gain a lot of equity. So now the house is worth about $665,000. But there's also this on the other side of that balance sheet, right? You've got 3 credit cards and a car payment or car loan totaling about $85,000 total, but it's about $2,300 in total monthly payments, right? So you've got your mortgage on the one side, which is at a really low interest rate. I put 3% interest, but you've got on the other side some high interest debt, and some of it's variable, and we know what the Fed has done with rates, and so those payments just keep going up, and they keep kind of grinding and being rather painful to the tune of $2,300 of your take-home pay every single month. And this is based on a real, I've done a lot of these, and anyway, this one I made up, of course, but it's based on something very, very real and very accurate. So if we go here, I'm going to deselect all, first of all. Let's say we refinance at a rate of 6.5%. So you go from 3% to 6.5%. Well, who would do that, right? Because all of a sudden your monthly payment went up $700. Well, that doesn't make any sense until you say, well, it went up $700 because the rate went up, but also we're pulling out enough equity to pay off all these debts. So if we select all and say they're all paid, all of a sudden, look what that does. It's over $1,000 a month of added cash flow, right? $12,000 a year. And think about that. That's take-home money. So if you're in the 30% tax bracket, that's almost $16,000 that you would have to earn more to get that money. That's a lot. Okay, but let's just say, yeah, it'd be nice to get rid of all that debt and consolidate and all that stuff, but man, I don't want to go up in rate because I'm resetting to a new 30-year fixed rate. I'm a couple years in, 3 years in right now, something like that. Well, here's the interesting thing. Good luck making your payments right now. And so let's just say you keep on making those payments, but instead of sending all that money to the credit card agencies and all that, you put it towards your mortgage. Well, you apply the whole $1,063 a month toward the principal. That is 100% principal because the payment covers the interest. You would pay this mortgage off in just over 15 years and 4 months to be exact. In other words, you'd be cutting 11 years and 6 months off the term, your current term. And your net worth would increase by just shy of $200,000 because you would have paid it off that much more quickly and not paid that much in interest. So one thing you could do with this extra $1,000, of course, is just simply breathe and have an extra $1,000 flowing through the household every month. The other, though, is to say, well, if we get rid of all that non-productive debt and then use the cash flow that we were paying out anyway to the house, how much more do we save? So I just wanted to share that for one reason. It's a big number, and it can be a big number. So I know a lot of people, it may be you or maybe someone that you know, and please share this with them if it is, that is under stress right now because all these payments have gone up and it's stressing the whole household. Well, this is a way to use some of your equity that you've built to get relief. And so if I can help do something similar to this, but a real scenario for you or a family member or a friend or a coworker, please share it because I'd love to help out. It really does bring a lot of relief. And assuming you're like, well, I can make all the payments anyway, it can really build wealth quickly. And by the way, I think rates are falling. So if you refinance at our hypothetical 6.5% right now, doing a cash out, well, no cash out is always a lower rate anyway. And when rates do fall, it might make sense to do another refinance, a final one, with no cash out at that point at 5% or high fours or something like that, and use that added savings then to keep on paying down that mortgage even more quickly and just keep building wealth. So strategy for today, if I can help with that, let me know.